an incredibly exciting time for me to get to stand up here and welcome you to Los Angeles because I think, as most of you know, this is CFSI's 10th anniversary. And we've been celebrating our anniversary over the last 10 weeks in this stretch from April 1st, which is when CFSI was officially born, until today. And I'm excited to share with you where CFSI is going to be headed in our next 10 years. But in order to do that, first I've got to reflect with you on where we've been. Now, I don't know about you, but I know exactly what I was doing 10 years ago. Now, I'm fudging this a little bit because my older daughter Lillian will actually turn 11 on Friday, and I will not be there for her birthday. So this is the closest thing I could come up with to a birthday shout out. So I'm hoping someone is videoing this. I can send it home to my daughter and tell her I said happy birthday to her from the stage. But the lore around CFSI, and there is some truth to it, is that I gave birth to Lillian and then I came back to work and gave birth to CFSI. Now, what were you all doing 10 years ago? Do you remember? I'm going to help jog your memory a little bit, and we're going to do this contest style, talk show style. So here's a clue. What famous TV sitcom went off the air in 2004? Anyone remember? Friends, yes, very good. There will be t-shirts after. What embarrassing incident happened in Super Bowl 38? Wardrobe malfunction, very good. I am terrible at these kinds of trivia games. I've got one more for you. What did the city of Boston have to cheer about in 2004? That's right. As they finally broke the curse of the Bambino, winning the first World Series since 1918. I can tell you that as a Chicago Cubs season ticket holder, I can remember distinctly that when they won 10 years ago, we all thought, maybe there's hope, but not so much. In politics, in 2004, Ronald Reagan died, and George W. Bush, was reelected to a second term as President of the United States. In business news, the last Oldsmobile rolled off the assembly line after 107 years in production at right around the same time that Google went public. Yeah, that was only 10 years ago. We were all listening to a lot of iTunes because we downloaded more than 100 million songs off iTunes in 2004. And does anyone know who this kid is? This is Mark Zuckerberg, and he's in his dorm room at Harvard launching the Facebook, which also happened in 2004. In banking, 2004 was the year of the mega merger, and it really set the landscape that we know today. Bank of America bought Fleet Boston, JP Morgan Chase bought Bank One, and a whole range of regional and super regional banks announced mergers and acquisitions of their own. And now as banking was getting bigger and bigger, money was getting faster. 2004 was the year that Check 21 took effect. That's the law that made it legal to turn a paper check into an electronic transaction. And it's what went on to enable what we now take for granted, being able to deposit a check by simply taking a picture of it with our telephone, with our mobile phones. ATMs were growing like weeds. In 2004, there were nearly 400,000 ATM units, and they handled nearly 1 billion transactions. In fact, one analyst at the time projected that ATMs were going to, at some point, surpass the bank branch as the channel that handled the most transactions. And that might have actually come true if it weren't for the rise of the internet. Al Gore had recently invented the internet around this time, and consumers were flocking to it. And right behind them were the banks. And as you can see from this chart, which is, very late in the 20th century, you can see we still called it PC banking back then. And I think what was so exciting is that even though there were no iPads yet, and we couldn't even imagine what was to come, in financial services at least, I think we began to understand the promise of technology in that it simultaneously offered the opportunity to dramatically reduce the cost to serve consumers, while at the same time vastly increasing access well beyond the branch. But despite this promise, there were still millions of Americans who were without access, who were left out. Remember, back in the mid-1990s, the federal government decided they wanted to get rid of checks. They said that they were going to stop sending Grandpa his Social Security check in the mail every month, and instead they were going to directly deposit it into his bank account. And when they got ready to do this, they realized that 10 million benefit recipients didn't have an account. And that was really the first time that the notion of the unbanked became part of the public consciousness. And so it was really these two trends, technology change on the one hand and lack of access on the other, that led our friends at the Ford Foundation to ask a very simple question. How can technology innovations in financial services benefit those who need them most? CFSI was founded to try to answer this question, to both shine a spotlight on the challenge of being unbanked and on the opportunity that banks had to leverage technology to better reach and serve this market both profitably and responsibly. And so I came back from maternity leave with a mandate to start CFSI and to try to answer this very question. But there was no playbook for how to do this. There was no blueprint. And frankly, we had a lot more questions than we did answers. And in what would become a constant theme, we went looking for innovators. We asked ourselves, what if we invested in the most promising innovations we found? We went looking for entrepreneurs who shared our vision of how technology could be a disruptive force, bringing efficiencies to the market and improved experiences for the consumer. And one of the very first innovators that we found was Hamid Shabazi, who had just started a company called TIO. Hamid had come to understand that millions of consumers paid their bills each month in cash and in person, creating huge headaches and inconveniences for both consumers and billers. And he created this bill payment kiosk, a reverse ATM of sorts, and he located it in places where underserved consumers frequented, the gas station, the corner grocery store. And his vision was to not just offer them an opportunity to pay their bill in real time, but also to benefit from an array of other financial products and services. We started to find other companies like TIO, companies like Progreso Financiero, who was trying to figure out how to make small installment loans to Latino immigrants who lacked a credit history. Or iSend, who was trying to revolutionize the money transfer business. Account Now, which was one of the very first prepaid card companies attempting to sell and service this product completely online, which in the early part of the 21st century was still a novel idea. Or L2C, which was gathering and analyzing non-traditional credit data to help lenders make better decisions about thin and no credit file consumers. And as we found more and more of these entrepreneurs and invested in more of these companies, we realized that there was a need in the market for smart capital to help take these important businesses to scale. And so we decided to get serious. Along with my colleagues, Ariane Schutte and Mike Harris, we launched Core Innovation Capital, a double bottom line venture fund that essentially invented the idea of fintech for the underserved. Including all the investments we've made over the last 10 years and the seed funding that we've provided to nonprofit innovators, we've invested nearly $30 million in this market, and it is paying off. Fintech for the underserved is now a mainstream offering with over $5 billion in M&A activity last year alone. But when we started out, we started making these investments, these companies were still really small. And we realized that if we were going to be able to have an impact at scale, we were going to need to bring some other people to the table, some other scale companies who might acquire these innovators or partner with them or frankly emulate them. And so we asked ourselves, what if we got the right people talking to each other? We decided to create an industry forum. We called it the Innovators Roundtable. a forum for discussion and dialogue, for sharing best practices, and for partnership development. And we went out into the market looking for some companies willing to join. And those first 5 companies were Citigroup, eFunds, which is now part of FIS, Experian, H&R Block, and Wells Fargo. And over the course of time, more and more companies came to the table. We also identified other pockets of innovation and created forums for them, for small banks and credit unions, for nonprofit innovators, for regional and super-regional banks. And today, 10 years later, we work with well over 50 companies and organizations who use our forums as an opportunity to develop the kind of insight and partnerships that they need to take their businesses to the next level. As companies started to understand the opportunity that the underserved market represented, they wanted to know how they should put their capital to work. What were the greatest consumer needs? What should they be working on? 10 years ago, for us, the big issue was access, basic access to the system. And it was why we've been so interested from the very beginning in prepaid debit cards, or as they were called 10 years ago, stored value cards. Pretty much anyone could get one of these cards. They were available at thousands of locations across the country. And as the internet was becoming more popular, we realized that consumers who didn't have a bank account were still going to need a way to transact business online, or else they would be left out. But we also had the sense that prepaid could be so much more than just a payments tool. And so we asked ourselves, what if prepaid debit cards became a bridge to financial stability? We started doing some consumer research to understand how consumers used these products and what they wanted from them. We built relationships with the leading providers of the day to understand their opportunities and challenges, and we asked them to join with us. We brought them and a range of other stakeholders to the table to create a set of best practice guidelines for prepaid to raise the bar on quality. And now, 10 years later, with a 20-fold increase in load volume and commercials on primetime television, what was once seen as a fringe financial product is today a mainstream offering. Prices are down, quality is up, and prepaid has truly become a platform for a full-service financial relationship. But despite having provided access to consumers, we found that a lot of them were still having trouble putting aside money, to saving any money at all. And so we decided to spend some time getting to know the leading behavioral economists of the day. We made friends with Dick Thaler, a professor at the University of Chicago, right in our backyard, and really the granddaddy of behavioral economics. In fact, he co-authored the book Nudge, and he spoke at this conference several years ago. And this year, I'm thrilled that we're joined by Eldar Shafir, a leading behavioral psychologist and the co-author of the recent book Scarcity. We spent time with them understanding the psychological and cognitive and emotional factors that influence financial decision-making. And armed with their knowledge, with the knowledge they shared with us, we asked ourselves, what if we rewarded good financial behavior? So we went looking for innovators, and we found one in the Doorways to Dreams Fund. D2D had this idea. They wanted to pilot in the United States a concept that had worked well in many other countries around the globe. The idea was, instead of relying on paltry amounts of interest to encourage people to save money, why not make savings fun and leverage the psychological power of winning it big by entering active savers into sweepstakes for cash prizes? So we helped to fund their initial pilot in Michigan, which went on to be replicated in a number of other states. It also served as the inspiration for startups like PayPerks and SaveUp, and has really now inspired a whole cottage industry of companies who are using gamification and other techniques to motivate and incentivize positive consumer behavior. So now we've got access and we've got savings, but neither one of those things was really helping very much with credit. And what we had learned was that there were at least 50 million consumers who had thin or no credit files, and so lenders couldn't even make a determination about whether or not they were a good risk, and they were really shut out of the system. And so we asked ourselves, what if people got the credit they deserve? We again went looking for innovators, companies like L2C, who I mentioned earlier, companies that were gathering and analyzing non-traditional credit data. We also learned that nonprofit lenders were really having a hard time reporting to the credit bureaus because they just were too small. They didn't have enough volume. And that meant that tens of thousands of low and moderate income consumers around the country were borrowing and repaying successfully and getting no credit for it. And so we seeded the creation of a nonprofit intermediary called Credit Builders Alliance. And today, over 150 nonprofits are reporting 25,000 trade lines a month. We also made an investment in a company called Rent Bureau. Rent Bureau was trying to do for renters what homeowners already had the opportunity to do, to build a positive credit history with on-time monthly payments. And when Experian bought the assets of Rent Bureau and integrated the rental data into their credit database, overnight, some 10 million renters who lacked a credit score all of a sudden got one. Now, around this time, we were starting to feel pretty good. We were starting to feel some traction, lots of new products and innovations in the marketplace. It's when I got a call from my friend Brandy McHale at the Citi Foundation. And she said, I think it's great what you're doing, but what do we need to do to make sure that consumers know how to use these products and services effectively? We said, you have a point. So we went out into the market looking for who was doing this well, who was doing a good job of giving consumers the information they needed to be successful. And what we found was those who were doing it well weren't telling consumers what they needed to know. Rather, they were designing the kinds of products and experiences and communication channels that help consumers succeed at the doing. And so we asked ourselves, what if we could create tools to turn financial education into true capability? We created a coalition of financial services providers led by the Citi Foundation, and we created a seed fund to encourage nonprofits to partner with financial services providers and experiment with new ways of working, to shift from financial education to financial capability. And today, thanks to that work, financial capability is really now the norm. The President's own advisory council several years ago renamed itself, and tens of millions of dollars have been reallocated to financial capability initiatives. Most importantly, though, from where I sit, I think that banks have come to appreciate that static, standalone financial education is simply not sufficient, and that to be successful, they really need to find ways to embed the information and advice into the product, into the experience across the life cycle. We've accomplished a tremendous amount in this arena, but there's more work to do. And so we were really excited last week to announce the launch of a new financial solutions lab in partnership with JPMorgan Chase. Chase's unprecedented $30 million commitment is going to enable us to run a series of challenges and competitions over the next 5 years to bring the next generation of entrepreneurs to the table and create the next set of tools to help consumers be financially successful. Now, the real reason that Brandy called me was because we were in the depths of the financial crisis and Great Recession, and we were all trying to make sense of what was going on. There was a lot of finger pointing going on about what had gone wrong, and a lot of talk about how financial innovation was to blame. And we realized that if we were going to be able to be successful in achieving our mission, if we were going to be able to answer the question of how technology innovations in financial services could benefit those who needed them most, we were going to have to figure out how to define what good innovation looked like. And so we asked ourselves, what if we defined quality in financial services? We spent about a year working with stakeholders across our network to create the Compass principles: embrace inclusion, build trust, promote success, and create opportunity. With this foundation, we went on to create best practice guidelines for prepaid debit cards, and most recently for small dollar credit products. We've created tools and case studies to help financial services providers embrace these principles and embed them into their day-to-day operations. And I'm thrilled to say that today, dozens of companies are doing just that. The most recent example is Visa. I don't know if you happened to catch their announcement yesterday, but Visa announced that they are creating a set of voluntary standards for prepaid cards that meet a set of high-quality standards. We were really pleased to work with them and to bring the Compass principles as a foundation to that effort. And we'll have a chance to hear tomorrow from Cecilia Frew at Visa to share a little bit more about the details. CFSI was founded on a very simple question. But that question generated more questions, and we spent 10 years answering one question after another. And in the process, what we discovered was that this question, the original question, has changed. Because in focusing on improving the financial services experience for those who need it most, we've actually come up with the formula for how to improve the financial services experience for everyone. You see, it's not just about bank accounts, and it's not just about the underserved. It's about financial health, and it's about all of us. Financial health is when your day-to-day systems build resilience and opportunity. It's the link between today and tomorrow. I introduced this idea of financial health in my remarks at last year's conference, and I did it by comparing it to the paradigm shift I see in the healthcare arena, from treating sickness to promoting wellness. And I also highlighted last year many of the tech-fueled innovations that are being spawned by that paradigm shift. I believe the financial services industry is on the cusp of a very similar shift, and I continue to believe that the analogy between physical health and financial health can be extremely helpful as we think through what's going to happen next. So let's think about it this way. We all know that if we eat right, we get some exercise, we get a good night's sleep, we're less likely to get sick. And if we do get sick, we're more likely to be able to get better quickly. And that over the course of one's lifetime, that means you're going to have more and better birthdays. You're going to live longer. Similarly, we all know that if we pay our bills on time, and we set aside even small amounts of money, and we don't take on too much debt, that we're going to be in a much better position to handle life's financial ups and downs, the leaky roof, the unexpected medical bill. And that then positions us to invest in our futures and retire successfully. Now, when you think about it that way, it becomes apparent very quickly that this isn't really about the underbanked. This isn't about us versus them. It's about all of us. When Michelle Obama decided to take on childhood obesity in this country, she didn't say, if you're suffering from obesity, I'm talking to you. No, she planted an organic garden on the front lawn of the White House, and she launched a national campaign around healthy living and exercise aimed at all of us. And it's working. For the first time, the youngest Americans in this country have seen a dramatic decrease in childhood obesity, in large part because of her work. Now, that doesn't mean that we shouldn't pay special attention, give special focus to those who are struggling the most. That's what CFSI has been doing for the last 10 years, and we will continue to do so. But if we want to consolidate the gains we've made, if we want to scale the innovations that we've seeded, we need to think health, and we need to think big. We need to redefine financial services from the pursuit of wealth to the pursuit of health. Because survey after survey shows that that's what Americans want. Americans are not so much focused on getting rich. They're focused on living their best lives today. And smart companies, the excellent demand creators of our time, build businesses that cater to their customers' aspirations. Now, this is bigger than fairness, and it's not about regulation. This is about the bottom line. There is simply no better way to build a profitable franchise in financial services built for the long run than to design and deliver the kinds of financial products and services that are going to help your customers achieve financial health. Because financial health, like physical health, is not a one-time result. Establishing and maintaining financial health requires persistence on an individual basis, but it also requires the right infrastructure and the right environment. It's about access and engagement over a lifetime. Our goal is no less than to increase the number of Americans with positive, sustained financial health. As we shift from focusing on defining a problem to promoting a solution, there's more that we need to do to quantify financial health and to understand how financial services can be part of the solution. CFSI is going to take the next step this summer in partnership with American Express and the Ford Foundation. We're going to take America's pulse, so to speak. We're going to go out into the field, we're weeks away, and do a very large national survey to really take a snapshot of the state of financial health in this country, writ large. And I think armed with this knowledge, it's going to serve us well as we move into our next 10 years. So before there was Facebook friends and before there were Twitter followers, CFSI was really just 3 people sitting around a table trying to figure out how to push the boundaries of banking. And along the way, we looked for innovative companies and organizations and asked them to join along with us. And now, 10 years later, just look around. We have grown into a vibrant, connected, influential network leading the way to a financially healthy America. And it's a good thing because this financial health thing is an audacious goal. And while it's extremely good for individual bottom lines, it's bigger than any one company or any organization, any single government. It's only by leveraging the power of this network that we're going to succeed at helping Americans achieve financial health, especially those who are struggling the most. CFSI was born out of a simple question. As we embark on our next 10 years, we seek to answer a new one. How will we lead our nation to financial health? Think about that question. Talk about it in the halls over the next few days. Ponder it when you get back to your desk on Monday. Discuss it 3 months from now when you're in a meeting, designing a new product, a new marketing strategy, a new risk management approach. Think every day about how what you do can lead America to financial health. Because the only way we're going to get there is the same way we got here, by leveraging the power of this incredible network of the nation's best and brightest innovators. That's who you are. That's who we are. And it starts right here, right now. Thank you very much.